that Red Rock Resources have in their portfolio, Red Rock also possess a series of investments and royalties that underpin the balance sheet to the tune of over £2 million. So let's start with the Jupiter Mines investment. Now, I understand this has been a long-term investment for Red Rock Resources. Can you tell us a bit more about Jupiter Mines, the investment and the dividend that is delivered by the company?
Yes, we of course, in our early days, sold a couple of iron ore tenements into Jupiter Mines and retained a royalty over them. And later on, when there was a bit of a vacuum at Jupiter, we brought in our then partners in iron ore manganese, Pallinghurst Resources, into Jupiter. And at one point, we had 28% of the company. Then we brought them in. We got swiftly diluted. And they've then brought in their South African manganese project, Chipi, which is the one that's been developed and is one of the world's, I think, 2 or 3 best manganese mines, and certainly the longest life, with about 100-year life, and is South Africa's biggest producer to China, where most of the manganese demand is, because 95% or so of manganese production at the moment is going into steel making, where it's essential. The growing use of manganese, as you may have noticed, is electric car batteries. And so that is something that is going to come in and start to become important. And you look at what Tesla's doing, they're using less cobalt in their future batteries, and they're going to use a substantial amount of manganese, which of course is good and cheap. Yes, we have an open pit mine at Chipi, and the Jupiter Mines is an extremely well-run company. We brought it into production. Our shareholding in Jupiter is now less than 1%, because we sold a bit as we go, because of course we're not just an investment holding company. The investments we have are relics of things we've done in the past, where sometimes instead of just selling out straight away, you retain interests or royalties, because that's how we're going to get the best return. Jupiter is, I must say, a great investment. It looks cheap to us. It has paid a dividend consistently between 10, 12% and over 20%. The return on equity, return on assets of Jupiter Mines over the last 4 or 5 years has been 28% per annum, which is quite exceptional. We expect to continue to be a very good investment. We're about to get our dividend. What's that going to be? £100,000. This is in a year where the Chipi is holding back quite a bit of money because of the uncertainties with COVID in South Africa. So Jupiter is not getting as much as it might. But final dividends in the spring of next year should be quite a bit higher. So it's useful to have a little bit of cash flow there. And also what is, by any standards, an undervalued investment, we believe. And that is, as you say, is worth more than a couple of million. The other very important thing with Jupiter is that it holds those iron ore assets where we have the royalty. And on Mount Ida, spent $40 million on doing a feasibility a few years ago. The iron ore price is now higher. Jupiter's not going to be spending money on that because it's in manganese. So we're going to spin out the iron ore. And we've been taking a very active part in discussions on that process within Jupiter Mines. But when that happens, we expect that we will have, mirroring our shares in Jupiter, we will be having shares in a new iron ore company there, which will be incremental value because, let's face it, those iron ore assets are valued at nothing inside Jupiter, and Jupiter's not going to spend money on them, so they don't even have optionality. So here's Jupiter. It's a dividend, which is, we think, on a bad year, a couple of £100,000, on a good year, very considerably more. And it's also a capital investment, which is liquid and is like on sort of our inner reserves. It's there to make sure that we don't go bust, but we always have enough cash in an emergency. We like to keep it because it's a good investment and it's going to improve. And then particularly, we want to keep it until the iron ore is spun out, because that's important to us, and the discussions in relation to that are that important to us too.
Okay, Now, Red Rock Resources also has 25 million shares in London Stock Exchange listed company Power Metal Resources, that's POW, worth approximately $250,000. Can you give an overview of the Pow Investments, as I believe you are also the executive chairman of that company?
Yes, we've got 25 million shares in Power Metal Resources. We also have 20 million options, which or warrants, which last until February next year. Once we get above a penny, which is we're just over now, then that's £250,000 plus you're talking about starts to go up at twice the rate because of the value of the warrants. We are very optimistic about this. We've got some great projects in Power Metal Resources, largely in nickel and largely in Botswana. But Power Metal Resources, as you know, has a 50-50 joint venture, essentially 50-50, with Red Rock in Australia, which is a kind of hobby that we undertook during lockdown. And this hobby has kind of grown out of all proportion. And now it's something that we expect to be able to list quite shortly.
Okay. And finally, Andrew, the LIMON gold asset in Colombia was sold in 2015 as part of the deal. Red Rock Resources received $3 million royalty from the project. Can you update us on the status of this project and the royalty payment schedule?
We sold this asset, which historically had been one of the richest mines in that belt. And that belt itself in Antioquia had been historically the richest. In Colombia, if you take Colombia as the richest gold producer historically in South America, within Colombia, this area, El Limon and northwards, for a few tens of miles, was the richest. Century after century, whenever there was a gold boom, that area came up and started to predominate. The company to which we sold El Limon has now acquired some good ground a little further to the north, right in this area. They're concentrating on that at the moment. We have been getting modest royalties because it was hard work for them putting in a new shaft and doing the work necessary on a new mill at El Limon. Took them longer, cost them more, and maybe they weren't so expert. We're hoping that at the end of this year, when they have got their license and things more organized, they will be able to up the rate of production there, and we'll get bigger royalties. But that we have to wait and see. And that's not our only royalty, of course, because we also have the iron ore royalty in Jupiter, which I was talking about. And with Australasia, with Red Rock Australasia, we've got all those gold assets in Victoria, but we do separately hold a small royalty on all of them, so that even if we were to dilute in future there, or sell off or float it off, that royalty remains part of our core investments and royalty portfolio.
Okay, well, thank you, Andrew Bell, the CEO of Red Rock Resources, to talk to us today about the suite of investments that Red Rock has in their portfolio.